guys, let's do the practical session about imbalance. So in the previous lesson we did like a theoretical review of the FVG, fair value gap imbalance. In this session, let's try to cover some practical examples. Again, as always, I will cover I will do a longer recording, a longer session with real examples, with risk management explanation and everything for the closed channel. So those of you who didn't join already, you're welcome. Drop a DM, put in comments, I'll send you an invite. So let's go. Let's see what examples we have here. So overall, we see a very clear a down movement. So we have here our CBOS here, CBOS here. So we're clearly waiting for the downtrend, and we have seen already one liquidity sweep over here, and the price having pushed down. Here we can see some equal pushes as well. So yeah, we're either waiting for some M movement or we're waiting for liquidity sweep. So yeah, let's see. Let's see what we can find. Overall, as well, as I mentioned, we are not looking for imbalance to be used as our entry point. Imbalance is more like a point of interest, like a zone of interest, which we use to do our analysis. On its own, it's not enough. This quick movement as well here, a very good example. This was on a shorter time frame. This was an imbalance which could have been used. And again, guys, about the time frame, whatever you prefer. So in the end of the day, all the smart money patterns, they are repeating itself on every single time frame. So yeah. So let's say this, if I put my time, yeah, this is pretty much like, I'm trying to avoid when backtesting, I'm trying to avoid the nighttime because it's unrealistic. But here we basically already see what we want. We see two imbalances. And again, we are not gonna hope for it to be covered. So what we should see is basically a partial cover, but the point is here that we are waiting for the liquidity sweep. So this could have been our liquidity sweep as well, but then the price is pushing a bit upwards still. So if we open a trade here, not very good chances. So again, this is not one of the trades which I would recommend to open if you're a complete beginner. But as well, we can see, for example, a partial cover. So most probably it's not gonna even get here. But again, let's just do a test run. We should see multiple cases. Let's not be greedy. And let's see how it performs. Yeah, here it hit the stop loss, as you can see. So basically, this is just an example that you shouldn't use imbalance on its own for your trading as a whole trading strategy. Use it more as a zone. Although you see, like it is gonna cover it partially, but it's never gonna reach the it's not gonna cover it yet. So again, it's trying to grab all the liquidity as well. Very strong movement. Okay. So basically all the covers of the imbalance is essentially, it's the price is always trying to return to balance the pricing. So any sort of imbalance is basically gonna attract the liquidity, because typically where the imbalance happens, this is where your limit orders or profit orders or stop losses are being accumulated. And the big player, they always see that the market makers, they see these cases, and they're obviously trying to grab this liquidity. So that's why the imbalances are very typically covered partially or fully. But again, don't put your hopes on this strategy. Like, don't put this as a base of your strategy. Okay, so let's see what's happening here. We basically have our imbalance, our green candle. So let's see. This could as well be our liquidity sweep. So overall, again, we're not basing our trade only on imbalance. What we're seeing here is that right now this was a liquidity sweep for all of this liquidity, all of these equal highs here as well. So all of these equal highs have been swept. And we are basically looking for a very strong downtrend. I think let's even increase the trade amount. And let's see what we're gonna get here. So all the risk management, I will explain it more in details in a closed video. Okay, so here is the example, as you can see. And yeah, so these areas, they typically appear during periods of some strong momentum. Yeah, so when basically one side of the market is temporarily gaining some clear advantage, the price just moves back in, because we have seen here the overall downtrend. We know that we're expecting a liquidity sweep downtrend. And more deeply, fair value gaps, they occur when a flood of aggressive market orders, it quickly absorbs available counter liquidity. As a result, the price just jumps in over part of the range, leaving behind some area where activity was minimal. So this is why these zones often appear as a blank spot for this movement. So this is what we have witnessed here basically. And yeah, some good result. Anyway guys, as usual, like and subscribe, comment the video with your questions, join our closed community with traders, and I'll see you in the next tutorial. Okay, thanks, bye.